Okay, guys, so this is going to be the first weekly recap. So we're going to start it off on Monday, April 6th. So just going into the day, my bias was obviously very bullish. On Thursday, we had a great expansion in New York session. We didn't sweep this major draw on liquidity, but we ended up doing that as well. And we're respecting the higher time frame gaps. So this 4-hour gap is being respected. We create an intermediate low here. In Asia session, we created a nice 1-hour fair value gap that does end up getting respected. And in London session, we do start to enter more of a price discovery range. And on New York market open, right? What really happens, because it is a no news Monday, we start accumulating, creating low resistance liquidity. Now, low resistance is really great targets in a bullish context, and the whole reason we truly trade New York session is to catch the low time frame manipulation, and that's exactly what happened here. We manipulated this London high, and we created low resistance liquidity. That literally means we created more targets for us to expand to, and we create an SMT divergence with ES. There's the lowest here that we tapped into, and I was truly just bearish on the day. So if we go to the 1 minute time frame, now what I really want to catch here is some sort of inversion. Now there it is. We have a low time frame IFVG. Now this really shows me that we swept London lows, we created SMT, we have a lot of low resistance targets, so have London targets as well, because this creates relative equal highs, which is a really great strong draw on liquidity. And now this is where I enter. I can set my stop loss at this low because it's a protected low. It's a low that swept liquidity. There's no point for price to take this low, especially with the SMT as well. And we can target this high as well. And now this retracement, honestly, you shouldn't really be worried about it, because if I use my fib tool, we are respecting the 0.5% of it. So, and there it is. We literally just hit our TP right there. And that's it for Monday, honestly. Really choppy day in terms of how we usually like to trade. But this setup did present itself, and it was pretty good, especially because I had really strong conviction in the overall bias. And I understand what it means to be truly bullish, and low time frame manipulation, especially on New York market open, it creates this sort of low resistance liquidity which can be used as targets. But if we wanted to see the whole move play out, it honestly would have. But if we're targeting a 1 to 2 RR, that's literally our piece of the pie, and then we should be done for the day. So that's all of Monday. Okay, guys, so moving on to Tuesday, I was very short-term bearish, but long-term bullish. Now, what does that mean? So on the 1 hour, there's this 1 hour balance price range. So you can see that we entered price discovery, but then it was quickly shorted, and there was a fair value gap that was inverse, and that also aligned with this 1 hour bearish fair value gap. And now that's what we call a balanced price range, and we had relative equal lows for Asia and London as well. And we also left 4 hour relative equal highs, and that was sort of what made my bias on the long term bullish as well, because this is a really great draw on liquidity for price to target, and we've also been consolidating in this range for the past day or two. And so that's what was sort of going on in my head when deciding my bias, and that's what really made me short-term bearish but long-term bullish. So if we move on to the 5-minute, right, as market opens, what we see happening is we see pre-market accumulates, and we create an SMT divergence with ES. we also have this accumulation, manipulation into balance, 1 hour BPR, and we're looking to catch a distribution down to these relative equal lows, which is a strong draw on liquidity. Now, if I move on to the 1 minute time frame, as market opens, there's a nice 1 minute inverse, and we can short targeting this. So let's see how it would play out. So nice. It was a really great setup. I honestly entered a little later than I wanted to, but you would have taken this inversion as well. Now, let's just do a quick little trade recap. This would have definitely been the trade of the day, especially with how confident we were in our bias, because we had a really great AMD setup form as well as an SMT sweeping an intermediate low within a 1 hour bearish fair value gap, and this BPR is a really strong target to get a manipulation leg out of. So as you can see on market open, we kind of wicked into this range, into this BPR, and this rejection block is huge because it literally tells us that price is rejecting this area significantly. But that's not the only setup that that there was. Speaking of long-term bullish, right? If we let this play out, I mean, it would have played out for more points, but we're trying to really just get our piece of the pie, right? That's really what we're here to do, and that's really important to not extend our targets. But that's not the only bearish setup that I see. So after we sweep our drawn liquidity, which is our relative equal lows, right? We also expand upwards, and this is really important because we left our previous day low unswept. And now that I know that, I'm looking to catch another short off of this. So what happens is after we rebalance this leg that swept our relative equal lows, I'm now going to try and catch a trade towards our previous day low. And then I do my fib tool from this swing high to this swing low, and this 15-minute fair value gap aligns with this OTE zone, and there's a 15-minute rejection block here as well. And now if we go into the 1 minute chart for our entry, there's a 1 minute inversion. So now we can look to short, targeting our previous day low, and then we can have our stop at this swing, or at this 15-minute. Now let's see if this plays out. And there we go. Just like that, that short played out. A rejection block, a 1 minute entry, a 1 minute IFVG entry. And this trade was really just a short if you didn't catch the initial short down to our previous day low target. So on Tuesday, there were 2 shorts and 1 long opportunity, which we'll get to later. So now if I keep going with price, after we sweep our previous day low, right? Keep in mind, this previous day low is within a 4-hour fair value gap. Now, this is what we call a soup model. A soup model is when we rebalance into a higher time frame fair value gap, and there's an intermediate low inside of this gap, and that gets swept. And it's really powerful if you're trying to look for reversals. And keep in mind that a 4-hour continuation trade is a lower time frame reversal trade. Now, we can look to take this first inversion. After sweeping this low, we also created an we created an SMT with this previous day low. We also had a 4-hour fair value gap. So now I'm looking to take a buy entry, and we're looking to target our previous day high. Because keep in mind that I am really long time frame bullish. So if I let this play out, and there we go. Our trade hits RTP. Let me just get rid of all this because it's a little confusing. But since I was really long-term bullish, right? This 4-hour gap and this previous day low, and there's an SMT here as well. And this low time frame 5-minute inversion gap. Now this is a really great soup model, and it played out really greatly, and I was so confident in our high time frame draws getting hit that I was able to take this trade. So that's it for Tuesday. Honestly, really great ping pong price action. Initial short off this AMD into the BPR, then we can get a continuation short off the sweeping relative equal lows into our previous day low, and a great soup model off this 4-hour gap SMT at previous day low, a low time frame inversion, targeting our session highs. So overall, just great price action for Tuesday. Let's move on to Wednesday. So for Wednesday, Asia session really just shot up over 1,000 points, took out every single draw on liquidity. We were also consolidating in this range for a couple of days as well. That completely changed. Every single draw on liquidity was taken. But what did happen was a new 4-hour gap was created here. And this 4-hour gap is a really great example of how internal range liquidity can be used as a draw on liquidity. So Asia at the end sort of just started creating low resistance liquidity. A lot of targets for price discovery in New York session. So as New York opens, we just sort of manipulate down, and the S&P sort of did the same as well, and we get an SMT divergence. And here I would take a short position, and I would target all of this low resistance liquidity. And right off the bat, I want you guys to think of price as like a cookie monster, and every single low that we have here, which is our low resistance, is a cookie that price is going to take. So let's keep going. Let's go. So we got our target hit, and why did that happen? It's because low resistance liquidity gets ran through by price every single time that it occurs, and that's because it's little amounts of liquidity that needs to get taken for price to get sent higher. And we also had a little tiny SMT divergence here as well. There was definitely a better entry that you could have taken, especially because there was equal lows. Honestly, I was waiting for those equal lows to get hit, but this 930 wick, this rejection block, it was just another great telltale sign of how bearish price really was. You could have also taken a short position off of getting the EQ of this as well, but overall, this is the only setup. It was kind of hard to look for longs as well because we just shot up so rapidly, and it was really hard to find longs in this market, especially with the war news going on, and this low resistance was just a great sign that New York was going to open bearish. So that was all for Wednesday. Okay, so this is a price action for Thursday, and for my bias, I was kind of neutral because we had a really great expansion. We also had really great strong draws on liquidity downwards, but we also had this range that I was also anticipating to get taken anytime soon. So Asia's session created some great relative equal highs, and as market opened, we accumulated, manipulated, and now what I'm trying to catch some sort of distribution, and there was also a little soup model here because there was a 5-minute fair value gap, and there was also a high here, and that's what sort of led me to look for shorts. And as market opened, we accumulated up. There was a 1-minute inversion, but I wasn't really confident in that because it was so early. Now I'm trying to look for any short opportunities, especially with a resweep of this manipulation, and that's a stronger trade. So now we created an inverse fair value gap, and now this is a really great trade because we have accumulation, manipulation, and now we're looking for anticipating a distribution. We have a 5-minute rejection block off of New York open manipulation, and we also have a 5-minute rejection block as well. We also have a soup model after we swept this high that was in a 5-minute fair value gap. So everything kind of aligned with shorts. Now, what happens with this trade is we can target this low. This was kind of a very discretionary setup. What happens is with ES, ES was looking very, very bullish for the day. And that was just because of war. I think these markets have been becoming less correlated. And so this was the first initial short position down to this. What happened was there was an SMT divergence at this low. Okay guys, so this is Friday. This is going to be the last trading day, and so for my bias for Friday, I was honestly anticipating taking shorts. We're delivering from a 4-hour fair value gap, and I really want to see this range get rebalanced, especially because we're so high into premium of the range. We also had this SMT with Tokyo highs, and that honestly also told me that we were going to be looking for shorts, and all of London was just generating liquidity for Asia to take a lot of low resistance targets. So we are accumulating, especially when market opened at 9:30. We just started creating more and more sell side targets. More low resistance was being created. And at 8:30 we had CPI, and CPI was a news data, and this news high can be used as a really strong draw on liquidity. And at 11:25 we actually crept higher and swept data highs, while ES failed to sweep it, but NQ swept it. So there's an SMT divergence. We also swept data highs, and we had a 1-minute inversion. And this is honestly an A+ setup, especially looking at the context too. We had great low resistance liquidity, but like this happened a couple days ago where we had to exit the trade because of an SMT divergence as well. So we had to exit the trade because of an SMT, but a great target would have been Asia and London relative equal highs. That was honestly my draw on liquidity, but it didn't get hit, so we just had to exit at this SMT.